This is Moneydance tutorial video number 2. If you haven't seen video number 1 yet, I will leave a link in the description box below. I'll also try to put one of the cards that pops up with the link to that video for easy access, but I would encourage you to watch that video before watching this one, because this kind of expands on the concepts of building a new database in Moneydance and some of the basics on how to set up the different envelopes and just kind of the philosophy of using Moneydance. That video I created for my daughter and son-in-law as they were getting started with their budgeting, and this isn't a definitive use of Moneydance. I'm not paid or sponsored by Moneydance at all. This is just the tool that I've decided to use. And the concepts can work the same in other personal finance software such as Quicken or some of the others that are on the market. So this is just how I use it, and what I'd like to go over today is just a quick review of the envelopes. I have changed somewhat. It's been a year since I put out that last video, so and it was kind of geared towards how my daughter was thinking, how she wanted her envelopes created. So I've changed them up to be more representative of how I would do it for myself, and kind of expanded some of those envelopes somewhat to have a more realistic view of the different types of envelopes that you would want to have in your budget. So we'll take a look at those. We'll talk about the process of budgeting a little bit and how I do that. We'll talk about credit cards and how I manage credit cards in Moneydance. I'm not going to get into whether or not credit cards are a good thing or a bad thing. I do like a lot of the concepts of Dave Ramsey's program, Financial Peace University. But he is very much against using credit cards for any circumstance. I feel as though if you can use them responsibly, and the definition of responsibly is that you pay off the balance every single month without an exception, then it's a tool that you can use. Some people like the security of it. Some people like the fact that they get points and rewards, airline miles, whatever the draw is for you. If you wish to use it and you can do it responsibly, then I'll show you how I use credit cards and manage them within Moneydance. We'll also talk about splitting transactions between different categories. So far, all of the transactions that I showed in the first video were pretty straightforward. You had an expense to one merchant or vendor, and how you recorded that expense and then pulled money out of an envelope to cover that expense. So we'll get into if you have to split transactions into different categories, reconciling statements, and the use of the reminders feature, which is here in the top left corner of the screen. And then finally we'll talk about the iOS app. So first we're going to talk about the envelope accounts that we have set up. So again, I've changed the name from the first video just to a little more generic. So the checking account is at my bank. So this is the My Bank checking account, and under the My Bank checking account are all of these envelopes. So again, from the first video, it's really important when you're setting up these envelope accounts that you set them up with the checking account or whatever account being the parent account, so that way as you're looking at your checking account, everything kind of gets wrapped up, and that'll make more sense as I explain the check register here. So, but that's a key feature, is making sure that those accounts are subordinate accounts to the parent account. You can see we have auto insurance, auto loan, auto maintenance, and going down the line here through all the different types of expenses that you might have throughout the month. Household, pet care, points credit card, rewards credit card, and we'll get into that once we start talking specifically about credit cards. And then we have subscriptions, utilities, okay, and a savings account, which is a separate, that's not a subordinate account, although you'll see up here there is a savings envelope, and we'll kind of talk about the difference between those. let's jump here into the check register. So here's a couple of assumptions that we're making for this scenario, and your scenario is going to be different for sure. But for my scenario right here, and I'm going to use the pronoun I or mine, even though this doesn't represent my pay or anything like that. This isn't my working account. This is an example account. But just for the sake of ease, I'm going to refer to this as my account and my paycheck and whatnot. So here on May 31st, I was paid $2,500 from my employer. The assumption is that I am paid on the 1st and the 15th of every month. And I'm a salaried employee, so my pay is the same each paycheck. So we're going to get into how that looks. So you'll have to tweak depending on if you're paid every other Friday type of a situation. Your budgeting process would be a little bit different. But you'll understand the concept of what we're doing here. So again, assumption is I'm paid the 1st and the 15th of the month, and that pay is consistent each pay period. So I used the 31st rather than the 1st just to keep the order of the transactions easier to read. So that the 31st might be the Friday before a Saturday or Sunday payday, and we get paid a little bit early. So on the 31st, I get my $2,500. And then on the 1st, all of the accounts, based on my budget, based on my plan, and let me pull that document over here and we can kind of quickly see where I'm getting that from. So I use a spreadsheet. It could be in Excel. This is a Google Docs spreadsheet. So again, here's the assumption. Here's the first half of the month. Here's the second half of the month. Okay. So my $2,500 comes in, and I then divvy that money out. Okay. If you listen to Jesse Meekum from You Need a Budget or YNAB, he would say give every dollar a job. So $2,500 has come in, and now I give each of those dollars a job. So in that first half of the month, I'm going to set money aside for auto insurance, for cell phone, some money for Christmas, money to give to church or any, whatever charity of your choice, clothing, Comcast, dining out, entertainment, gas, and so forth. Okay, so every dollar is given a job, and at the end of it, in this example, I had $260 left over, so I'm going to put that in savings so that way I'm down to zero in terms of the money that I need to budget. So that's one technique. Another technique would be, a lot of advisors would tell you pay yourself first. So don't just put what's left over in savings, come up with an amount. So let's say that your philosophy or your strategy is to save 20% of your pay every month and put that in savings. 20% of $2,500 would be $500 per paycheck. So instead of using the leftover, you're going to make that a $500 figure. And then, so if I do that, okay, now I'm $240 over. So now I have to go through these accounts and figure out where I can reduce to get to zero. Where do I need to sacrifice? So if that's my goal, is I want to save 20%, then I need to look at things like, can I save money on groceries? Can I save money on gas by walking or biking or taking public transportation to work? Can I save money on entertainment, dining out? Right? You're going to have to look at those different categories and figure out where you need to sacrifice in order to reach your goal of $500. But in my example right now, we're just going to go with this. So $260 in savings on the first half of the month, and then the second half of the month, there's my $2,500. And then I'm going to put money into my envelopes in these dollar increments. Okay. And then at the end, I had $285 left over, and that's the amount that I'm going to put into savings. All right, so that's, again, the assumption that we're using on how the budget is created. All right, so now we go back into Moneydance, and these transactions that you see are representative of those budgeted, that's the plan. So now I'm executing the plan, and I am transferring money into those different envelopes. See, Christmas envelope, church offering envelope, clothing envelope. Those transactions are going in till we get to the bottom, that last $95, and now my checking account reflects a zero balance because everything has been transferred out and into an envelope. But my overall checking account up here at the top left corner will still represent what I have in my actual checking account because, again, these envelopes are subordinate to that account. So they all wrap up into that account. All right, so the bank thinks I have $4,577.05, which I do, but I have them in different envelopes. At the end of June 1st there, I've got all my money into my envelopes, and then we start making payments of different sorts. Okay, a check goes out to church, and then I transfer money from my church envelope back into my checking account because when I wrote that check, I went $100 negative. So then I bring $100 back from my envelope, and now I'm back at zero. Then I pay the Sprint bill, $120. So I'm $120 negative. Then I go to my cell phone envelope, pull that $120 back. Now I'm at zero. So it's just a good check and balance for me to know that when I've paid a bill, I run into that negative amount, so then I have to go grab it out of an envelope, just as if I had physical envelopes with real cash in it, and I've taken money out of that envelope and I've handed it to the Sprint company. Right? It's the same concept. I'm taking it out of the envelope, I'm putting it in my checking account to cover that check that I wrote. Next, I have an ACH, or an automatic clearinghouse. So this is where I've authorized a vendor to automatically pull money out of my account. I haven't actually written a check. I haven't given them my debit card. They've pulled that money. So that's called an ACH transaction. So I paid my car loan for $350. Right? Then I go to my auto loan envelope and I pull that $350 and I pull it into my checking account to cover that, and so forth. So the 15th hits. There's my next paycheck, $2,500. Same process. Now, based on my budget plan, that spreadsheet, I'm executing my plan. I move those dollars into their respective envelopes. And then we have more transactions where that process just continues. Okay, streaming service, some groceries, and on down the line. Moved into July, same process, more checks. Okay. And at the end of the transactions, I'm sitting at zero, so I know I have all of my transactions covered, and the rest of my money is still sitting in their respective envelope, awaiting me executing that budget plan. Let's talk about credit cards real quick. Down here at the bottom, we see that I have two credit cards, points credit card and rewards credit card. So here in rewards credit card, I have some transactions. On the 3rd, I went to the gas station and put $45 of gas in my car. On the 13th, same thing, $37 worth of gas in the car. On the 19th, I went to the department store and bought some clothing for $83. Okay, and so forth. You can see another fuel, the gadget store, $18 purchased there. And each time I'm making that purchase, I'm categorizing it accordingly. So now the question then becomes, what do I do with that? How do I pull money out of those accounts? Let's go up here to that first transaction. On the 3rd, I went to the gas station, $45. If I go to my gas envelope, I can see here that on the 3rd, I transferred money. There's the $45, but I didn't transfer that to my checking account, right? Because then I'd be running that positive number. I want to keep that at zero. I transfer that to its own rewards credit card envelope. So here I've got an envelope that says rewards credit card envelope, and there's the $45 that I transferred in on the 3rd. The 13th, the same thing. If I go back to that credit card account, you'll see that I went to the gas station and I bought $37 in gas. So I take money from the gas envelope and I move it down to the rewards envelope. So that money is sitting there waiting for the next cycle to close out and the billing statement to hit. Now when that bill is ready to pay, the money's sitting there. I'm treating that credit card like a debit card, and that's really the key, is treat the credit card like a debit card, that you've got the money in your account and now you're holding it. That rewards credit card envelope becomes a holding account, awaiting the bill to come in, and ideally you've got the credit card set up with the credit card company to automatically make the payment in full every month. So now you're not having to worry about, am I late on my payment? Do I have the money sitting there? You're going to have the money because you're going to manage it like a debit card, and you're going to, when you make the purchase, move the money into that holding account so the money's there. There's no doubt about it. Now there's no risk when you just tell the bank to go ahead and pull the full amount every month on the due date. So the next one is a clothing transaction. We saw that on the credit card register there. Department store, $83. So I went to clothing, $83. I withdrew that from the clothing envelope and I put that in my rewards credit card envelope, and so forth. All right, so all of the June transaction, we had a couple in July. So at the end of June, I had spent $269 on my credit card. So let's say that today, which is July 14th, I make a payment, ACH. I don't make the payment really. The credit card has pulled the money from my account because I've authorized them to make payment in full. So that's Rewards Credit Services Company. Okay. Now my category is just that Rewards credit card account, and $269 was the amount of last month's transactions. So that's the amount that they pull. So we're even going to go here and say June statement in the memo field. $269 we see here as a negative. If I go down to the rewards card, you can see where we've made that payment, $269, which coincides with the amount that we owed at the end of the month. So we still have $83 in charges for the month of July, and that will go up as we make more charges, of course, and those will be paid at the beginning of August. But what do we do with that negative $269, right? We have to pull money from some account to cover that. Well, that's where that rewards credit card envelope, that holding account, comes into play. So now we're going to take that, and this is a skip transaction. We're going to say transfer to checking for $269. All right, so now we've put that money back into the checking account to cover the $269 payment that we made to Rewards Credit Services Company, and we still have $83 in our holding account. That is the $83 that you can see down here that will be due next month for the purchases that we've made already. So it's just moving money between the different envelopes for the purpose in which that money is going to be spent. So the next thing I want to talk about is splitting transactions. So let's go back into our check register. And today we go to the store and we write a check, or it could be a debit card. So you might want to put debit or debit card in that check number field. And then here we're at the discount store. We're going to make it very easy. We bought $10 in groceries, $10 worth of clothing, and $10 worth of household goods, okay? So at the top here, we're going to click the split button, and discount store, so groceries. So click that, and we spent $10. New split, discount store, and we bought $10 in clothing. Maybe we need new socks or something. All right, so $10 there. And finally, we needed some light bulbs, discount at the discount store. So this was a home maintenance purchase, so $10 there. All right, so the total payment was $30, which matches our receipt that we brought home. So we click OK, and the $30 is populated right there for us. So we hit enter. All right, so now our transaction is in our register, and we're showing our $30 deficit there. So now we need to transfer money in. So first thing we're going to do is we're going to go over to our clothing for the socks that we purchased. And this is a skip account, and we're going to say transfer to checking. And then a lot of times once you've done that transaction once, it's going to pre-populate. Makes a lot of your keystrokes quicker and simpler. and that was $10 from clothing. And then we go to our groceries account, and new transaction there, skip. And again, the reason I'm putting skip in there, and I briefly talked about that in the first video, is when it comes to reconciling, these aren't reconcilable transactions. This is just moving money from one account to another for our own purposes. This is not a bank clearing type transaction. So the word skip in there is just a memory jogger to say, I don't need to worry about this when it comes to reconciling. This is just for my purposes, my own tracking purposes. All right, so transfer to checking, and that was a $10 purchase from groceries. And then finally our home, so we have a household expense. All right, so skip this and then say transfer to checking, and $10 there. All right, so we've moved money from the different envelopes, and now we know next time we need to buy something for household, we have $80 left over. Next time we need to go grocery shopping, we know that we have $298 left. All right, and if we go back to our checking account, we can see the $30 transaction. We've moved $10 from each of those envelopes, so now we're back to zero. So all of our expenses are covered, and all of our remaining dollars have been assigned a job, and they are sitting in their respective envelopes. So the question then becomes, well, what happens if I didn't have the $10 in my household expense in order to buy those bulbs that I needed? There's a couple ways of looking at it. So the first is it really a need? Is that the only light in the house? Or does it just make the bathroom a little bit dimmer, but there's still two other bulbs in there, just, one of them had gone out. If there's not a need, can it wait until next month? If there is a need, it's something that cannot wait until next month, the next budget cycle, then you have some decisions to make. So number one, if I need money in that household expense, is there somewhere else that I can reduce my spending? Can I move money from groceries? Can I move money from entertainment? It's not an emergency, so I'm not moving money from my emergency account unless it's truly an emergency, right? Dining out, can I spend $10 less in dining out? So these, there's no right answer. It's just the decision that you need to make as to where your dollars are best allocated, and that happens. That happens. These are estimates that we put into these budget accounts. We try to stick to them the best that we can, but inevitably something may occur that's outside of our forecasting. So the whole idea is not to be overly strict, but to make educated decisions and to put you in the driver's seat, that you're making the decision as to where you're going to spend less money, rather than the bill coming in a couple of weeks and you being surprised, oh, I forgot I made that purchase. Where am I going to get that money from? Christmas comes up every year, but a lot of times we're surprised that, oh, I need to come up with money to buy Christmas presents. So, looking at your Christmas envelope to pay for those light bulbs may not be the best decision, because for a lot of people, buying Christmas presents is non-negotiable. You're going to buy Christmas presents, so you don't want to pull money from somewhere where you absolutely know you're going to need that money later. Pulling money from a savings account. Now, if you look at this savings account, it's zero. Why is it zero? Well, if you listen to any financial advisor, they're going to tell you a very important concept is to have an emergency fund. Dave Ramsey would say, before you do anything, you need to have $1,000 set aside for these little emergencies that pop up. Once you've then got that 1,000, and then you have your debt snowball and you pay off all of your other debt, then you want to build that emergency fund up to between 3 to 6 months worth of expenses. You have money set aside in case of a job loss or some kind of a catastrophic situation occurs. You've got a good amount of money set aside. So in this example that I'm showing on the screen, I don't have $1,000 set aside yet in my emergency fund. So as these bi-monthly paychecks come in, right, and I'm putting money in my savings account, then I've transferred the bulk of that into my emergency fund until I hit that $1,000. Then I can start accumulating some savings in there for those unexpected. You know, every once in a while something's going to come up that you just had no idea. You don't have a category for it, and there's just no way you could have predicted that. That's what a savings account is for. All right, so the next thing I want to talk about is reconciling statements. So let's go back up here, and I'm going to bring this back over. So this was the budget, and then I've come up with just a very simple statement. So this is the transactions from June. So on the 1st and the 15th, paychecks have hit for deposits, and then here we have the transactions, the checks that have cleared, and the ACH transactions that have cleared, and then an ending balance. So the concept of reconciling is the same as just any financial software. So we would do account reconcile. All right. And 3477.05 is our ending balance. 3477.05, and include sub accounts. We need to do that because we need those balances from those other accounts to be reflected. So you always want to include sub accounts. So we click yes. So here's where we're going to then start checking them off. So there's our deposit. We look at just the deposits first. So this is where that skip comes into play. So we're going to skip all of these. We don't have to worry about those. And there's the other deposit. So we'll do that. And then on this side, we don't have to worry about any of those. So we've got these ACHs that we're clearing, as well as the checks have cleared. Okay, and then you can see here difference of 0. So we've reconciled all of our deposits and our expenses, and then we can click done. So now here we can say we only want to see the uncleared, and it pulls those. As you saw, they had the little green dot over here showing that it's cleared. If you do that uncleared, then it pulls those out of there, and then you don't have to look at those. So that's how you reconcile your statement. Next, let's talk about the reminders feature. So the reminders is a way for you to schedule deposits and expenses, so that way it's easier for you to remember. Again, in this example, I get paid on the 1st and the 15th. So here is where you, on the 1st was a paycheck, on the 15th is a paycheck, and then we've got all of these transactions, and these coincide with my budget plan. So reminders, or you can even think of these as memorized transactions, and they're all listed here on the side. So so paycheck, if I double click on that, it brings it up in the edit. This little check mark here shows you which recurrence timeline I've selected. So on the 1st and the 15th, this transaction occurs, $2,500, and this auto commit button allows, again, my pay is very regular, it's the same amount, so I don't need to go in and type in the amount. I can let the computer do that for me by clicking this auto commit, and then you can say I want that to happen on the day of, which is 0 days before scheduled, or you can set that to a bunch of different timelines, right? And that'll come in handy in just a second, and I'll explain why. So on the 1st and the 15th, $2,500 automatically posts on my account. Okay. Auto insurance, monthly on the 1st, this transaction occurs, moving money into my auto insurance envelope for $100. And again, I can click that auto commit so that way it automatically happens and I don't have to do it. If you're not comfortable with that and you want to review the transactions just to keep yourself aware of where your money is going, that's perfectly fine too. So to do that, what you would do is you would come here and you would click, and then it brings up the list of all the different transactions that are on that day. So you would click record the next occurrence, and it brings up that transaction. Then you just click the record transaction, and you do that for each one. Why I have these split between the two is and this is a flaw of Moneydance. If I click here and it brings up this list, if the number of transactions that I have scheduled for that day exceed what you can see right here, then I can't get to those. I can't get to the ones underneath transfer to pet care down here. It would be below the screen and there's no way to scroll up and down. So it's fine if I have it set to auto commit because I don't have to do anything with it. But if I need to actually click on it and post it, I can't get to it. It just doesn't do it. If I try to scroll, it just goes away. So about 14 per day is what you can do, and then you move the rest of them to the next day so you can get to them. Come up here, see that was rent. All right, so it's set to go on the 16th, so it shows up on this day. If I auto commit it, then what I can do is I can say I want it to auto commit one day early, so it shows up, it actually commits on the 15th. Even though I've scheduled it for the 16th, so it shows that on the schedule, it would actually go ahead and post it on the 15th because I say I want it to auto commit one day before the scheduled date on here. So that's just kind of a little hack that you have to do to get that to work for you. Okay. So for now, I'm just going to leave it as is. So that's how the reminders work. So again, you're really just setting up so you can actually go once you, let's say that this transaction here, so you can two-finger click if you're on a Mac, or you can right-click and create a reminder from transaction. So this is where you would set it up. Say monthly on the 16th, I want this transaction to occur, and that's how you set up these recurring transactions, or these reminder transactions. If you're used to using Quicken, I think, or QuickBooks, they call these memorized transactions. Okay. So the last thing that I want to talk about is the iOS app that is a companion app to this program. It's a pretty good program, and what I'm going to do is I'm going to bring it up on my phone and switch over to a screen capture of my iPhone to show how that works. So from my iPhone here, on the bottom in the dock area there, you can see an orange icon that has stacks of coins, and that is the Moneydance icon. So we're going to go ahead and open that up, and it brings us to the list of accounts that looks just like the left side list of accounts within the computer app or application there. So you should see the same parent account and all the different envelope or subordinate accounts all the way down through the credit cards. So everything is there to include the amounts of that we have in those different envelopes. And that's very important because this becomes a very handy tool to use as you're out and about and doing your shopping. You can refer to your envelopes to figure out how much money you have in that you had budgeted in those different categories to make some informed and educated decisions as you're out. The way that it can sync from your computer to your phone is through Dropbox. There's a way that you can also do it through some kind of a shared folder on your computer, but Dropbox is normally the easiest way to do it. So on your computer, you actually go in and you select Dropbox as your syncing option, and you create a passcode, and then on the phone you go into the settings and you authorize Dropbox use on the phone, and then you select the file name for the file that you had put onto the computer, and then you enter the passcode, and then it authorizes the sync function between the two devices. So that's very handy. So again, you've got all of the information on here, so you can look to see if you're out grocery shopping, how much money do you have in your grocery envelope, which is down here. You can look to see how much money you have, maybe your clothing or you're dining out. While you're out, you want to go ahead and grab something to eat. You can look to see if you have the money to do that. Okay, you can actually go ahead and add entries into your account using the app here on the phone. So we're going to go into the checking account, and let's say top right corner we click the plus button there, and we're at the discount store. So right there at the top, discount store, and it has a memorized from the last transaction that you bought groceries. So we can click that and change that to maybe you bought something for your house, so it's a household expense. All right, so we can scroll up here, and we bought lawn and garden stuff. So we bought maybe some grass seed, and we spent $25. All right, the little orange arrow that points to the right, kind of towards the top of the screen, we're going to click that, and that can open up some additional information. So under the check number, we can put debit card, because we used our debit card, or you can put the check number, or Apple Pay if you decided to use Apple Pay and that's how you want to code it, right? So in the memo, let's say we bought grass seed. You don't have to put a memo in, but if it's easier for you, you can do that. So let's split this. So we've got grass seed, and let's say that we did buy some groceries. All right, so we can go down here, and instead of $25, maybe we spent $15 on that grass seed. And we're going to click add a split. Now, I don't know why it does that, but you pay attention to this payment and deposits. A lot of times it'll switch it over to a deposit, which kind of screws things up. But just be aware of that, and make sure you double check things. All right, discount, store, again here. All right, and then again we bought groceries for the second part of the split there. So we're going to go down here to groceries, click that, and that was $10 that we spent there. Oops, 10. Okay, so we'll click save. So now we can see third line item down there, discount store, $25. All right, it says 2 splits. And at the very top, you can see that we're in the negative for $25, which is normal, right? So we need to clear up our $25 negative there by transferring $25 into our checking account. So we had $15 out of our household for the grass seed. So we're going to click the plus button, $15. We're going to transfer, it shows up right there at the top, transfer to checking. So we can click that. Let's click and under the check number, we do want to put skip. All right, so we're going to click save on that. We're going to back out of that, and then we're going to go to groceries, plus, and we had $10 there. All right, so transfer that to checking. Click over here, check number. We're going to put skip again. All right, and save. All right, so now we go back up to the my check. We're at 0, which is where we want to be. All of our money is there, so our new balance is $4,253.05 in our checking account, but our register shows 0, which is what we wanted, because all of our money is allocated into our different envelopes. Okay, so that's how we use the iOS app for Moneydance. So now going back to our computer program, you can see that it has already synced via Dropbox, and our new balance is showing up here, which was the $4,253.05. If we go down, we can look here at the bottom and see that transaction right there that we used on the iOS app. If we go over to groceries, we can see the $10, and if we go to household, then we can see our $15 transaction that we did on the mobile app. So everything syncs up, and it's quite helpful and handy. So I hope you found this video informative and useful, and I wish you the best of luck as you determine how you're going to go forward with managing your money, because however you do it, the key is that you are actively managing your finances rather than your finances managing you. So thanks again, and take care.